Happy Friday, Brian Manning here with your weekly update. Let's get right to it. So, a lot to talk about this week. I'm sure everyone heard about the Federal Reserve rate cuts, which is super exciting for us to be aware of and for have taken place in the marketplace. I just want to go through a bunch of information with you now about this. So, the first thing just to be mindful of is that mortgage rates do not move in lockstep with the Federal Reserve, right? So, what I mean by that is when the Federal Reserve cuts rates down by 0.5%, that does not mean that mortgage rates move lower as well. So what happens is, if we look at the marketplace, mortgage rates right now are 1.5% to 2% lower than where they were about 10 to 11 months ago. So we've already seen a significant move lower in interest rates. Then you have the Federal Reserve cutting rates, but they don't cut actual mortgage rates itself. So let's take a look at what the Federal Reserve did. Bear with me for 1 second while I pull this up. Almost there. Oops, sorry, this is taking longer than normal. Here we go. Okay, so we had the Federal Reserve cut rates by 0.5%, which is exciting to see. 50 basis point rate cut moves the Fed's rate down from 4.75 to 4.5. So Federal Reserve kind of moves in a range. So that's the range that they're operating within. As far as the voting members, so there's always a vote as far as who wants to cut interest rates and what they want to do, whether they want to cut or hold or raise interest rates. So there's only one dissent, which was Governor Bauman. Not surprised to see Governor Bauman not want to lower interest rates. Governor Bauman's been very vocal about actually wanting to raise rates more. So there's only one person that was looking at not hiking rates. So the Federal Reserve came out and they were super clear. They have a dual mandate, right? So they're focused on stable prices. So they want to see inflation in that 2% range. The Federal Reserve does not think that we're going to hit that 2% range until probably 2026. But they do think that we're confidently moving towards the path of hitting that 2% target inflation range. And they also want to look at employment. So they said that job gains have slowed. In their previous statement, they said that the job market had moderated. So interesting to see that they think that the job market is slow now. That's probably one of their decisions of coming out with a 0.5% rate cut. They also say the economy is still solid, but they have not impacted what's called quantitative tightening, which is the rolling off of their balance sheet. That's going to be a topic for a different Friday update. So that we also get what's called a summary of economic projections. This is really important because this looks at what the Federal Reserve is thinking going forward and what we think their plan is going to be. So Fed funds rate kind of anticipates right now that we're going to see another 0.25% rate cut in November and a 0.25% rate cut in December. So I give us 100 basis points or 1% of total rate cuts for this year. That's the forecast going into 2025. If we look at this inflation, currently it's at around 2.6% and 4.2%. You know, this is a strange thing to me because if we look at housing, for example, so we got the CoreLogic rental index. This is for the month of July, and this showed housing. And so when I say housing, this is rental. So this is a combination of new leases being signed and existing leases being re-signed. So if we look at housing from the rental market for the month of July, it went from 2.9% increase down to 2.8%. So if we look at real data through places like CoreLogic, it's in that 2.9 to 2.8% range. Now we look at the numbers impacting here for the inflation data the government's giving us, and this says rents are going up at 5.2%. So it's just a huge disconnect there for right now. Then we look at what's called the dot plot. This is important as well. So this is Fed voting members. What do they think is going to take place as far as interest rates this year, next year, upcoming years, et cetera. So if we look at the remaining portion of 2024, we look at this, two people think we're going to see no rate cuts. 7 voting members think we're going to see 25 basis points in rate cuts, and 9 voting members, this is the majority, think that we're going to see 50 basis points in rate cuts. So that would be the 2 that we already talked about. What's interesting is if we go into 2025, we look at the Fed voting members, and majority think that we're going to see another 100 basis points, or actually be a total of 1% in additional rate cuts going into 2025. So momentum in the rate cuts will be for us moving forward, and you can see it here through what the Federal Reserve anonymously says as far as their dot plot is concerned. So looking at Jerome Powell's press conference, which I think is really important, that's something that we always want to pay very close attention to. He says the Federal Reserve doesn't think that they see a recession. They think the spending is resilient and growth has remained resilient as well. They think that 50 basis points should be their commitment for them not to fall behind. So they kind of came out of the gate swinging. with a big rate cut because they don't want to fall behind. Because usually the Federal Reserve has these really strong and wild pendulum shifts. They wait too long to hike interest rates, and then they wait too long to lower interest rates. So it kind of goes back and forth, this really strong pendulum shift. So right now they don't want to get behind the curve, and they said they are seeing rent decrease. So Jerome Powell came out, he released had a press release, and Powell and the Fed are definitely behind this. So Jerome Powell specifically said, I think as we normalize rates, so he's talking about mortgage rates here, you'll see the housing market normalize. And I mean ultimately by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best we can do for our households. So the Federal Reserve really coming out saying they're very conscious of mortgage rates. They're conscious about getting mortgage rates lower, and they truly do think that getting rates lower will help normalize and better the housing market. And this is really top of mind for them. So that's really great to see. And I'm super excited to hear that comment. It just means that they're focused on keeping stability in our housing market and making sure mortgage rates move lower. Something else I really want to focus on this week as well is active listings. So if we looked at existing home sales came out for the month of August, and it was down 2.5% on a month-over-month basis. If we look at that, that means that people were shopping for homes in really June and July when rates were definitely higher. So not surprised to see existing home sales come in lower for the month of August. And we got inventory, and there's all this talking to do about inventory being higher. So inventory right now for the month of August showed it was at about 1.3 million homes. But of the 1.3 million homes, a good chunk of them are already under contract to be sold, and there's only about 900,000 that are active on the marketplace. So this is a comparison of active listings. This does not take into account inventory for homes that are already sold, already under contract. So yeah, if we look at August of this year to August of last year, yeah, we're seeing an increase from 670,000 homes to 909,000 homes across the country. But if we look at pre-pandemic numbers, at this time in 2019, we're at 1.24 million. So, if we go back to August of last year or even look at the prior years, yeah, that was record low inventory. I think everyone agreed that we don't want to be in that position again. Certainly we're higher than where we were last year, but we're still well below pre-pandemic levels. And I think that's something that's very important for us to pay close attention to. I'm around all weekend. If you'd like to learn how we're closing purchase transactions in 10 days, that's right, I said 10 days. Give me a call. I would love to help you. My availability is 7 days a week, 8 a.m. to 9 p.m. Happy Friday. Happy Fed rate cut. I hope everybody has a great day.